Welcome to Global Money Talk, brought to you by SamPro.TV. Greetings to all of our viewers from across the United States, Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm your host, Tai Wong, and joining me today is Dan Ha, partner at Karani Asset Management. Dan, welcome. Good to have you on the show again.
Thank you very much. Glad to be here.
Great to have you here. One thing that I wanted to get your take on, and I know you have good contacts in the country, is what the heck happened in Korea earlier this week?
Certainly pretty shocking and pretty crazy. Certainly did not expect something like that to happen in Korea. Obviously a very developed country in year 2024, but it happened. I've been speaking I still have lots of friends, family members in Korea, and been speaking with them constantly. How I would characterize it is, it's been roughly about 48 hours since it happened. I think it's fair to say that the first 12 hours or so, which was nighttime there into the morning, was sort of characterized by confusion, really. People didn't really know what was going on, completely unexpected, and a lot of people at first thought it was a joke or fake news or something, and so lots of confusion. I think the markets were confused. And for me too, initially I was like, wait, what? And once it became clear that this was really in place, to be honest, personally, it was hard to take it really seriously. And I thought it was, okay, fine, it's really happening, but it's probably a chess move. And I'm trying to figure out why is this happening? What's this chess move about? And I think it's fair to say that a lot of people probably thought that. But as more details have come out, it's actually looking pretty clear that he was really serious, that this was a serious situation, serious martial law order. And so it went from sort of confusion to embarrassment, immediately following understanding what's going on. And now I'd say the mood is really anger. And I think, I don't speak for all Koreans, and my sample size of my contacts is pretty small, but I think it's fair to say that overall mood in Korea right now is really anger towards what had happened. So I think that's what the current situation is. The details are still coming out, but I'd be shocked personally if the Korean President Yoon wasn't at least impeached. I think impeachment is a very, very high probability outcome, and it's also looking like being prosecuted for treason, for coup, is also quite probable. I think that's sort of the likely outcome. In terms of what it means for the markets, it's too hard to tell. People are trying to figure out whether, what this might mean for the credit rating for the country and investor confidence in the country. It still remains to be seen. But as an investor, for me personally, what did remind me and really open my eyes to was the need to manage tail risks and to take them seriously. Because if you think about tail risks, most people dismiss tail risks as, well, yeah, if that were to happen, it would be really bad. But why would somebody do that? It would be suicide. It would be political. If some political figure or leader started a war, that would be suicide. So why would they do it? The reality is, and as we clearly saw in the last 48 hours, humans don't always think rationally, and that what is clearly irrational behavior and decision actually get made. So tail risks, it's often easy to kind of sweep tail risks under the rug by saying, well, if that were to happen, we'd have many more other issues to be worried about. But if we take tail risks seriously, they happen because people don't always make rational decisions. And I think it's pretty fair to say, I think you would agree, I think anyone would agree, that humans don't always make rational decisions.
Do you think there's any chance that we haven't seen martial law announced in Korea in 40 plus years?
Yeah.
When I saw that headline, my first imagine that our cores massing along the North Korea border, and that would be a huge crisis. But do you think that now that even though most people think it's silly or actually they think they're angry at them doing that, do you think that by doing it once makes it more likely that a future president might try to declare it again for perhaps less than really valid reasons?
Yeah, I mean, so fortunately, this was the attempt was thwarted, before. I mean, it was stopped, right? And it didn't happen, or it didn't get any worse. Therefore, I think this will be a great learning moment for the country, and I wouldn't be surprised, and in fact, I would expect the country to put in even more sort of safeguards to make sure that something like this, even an attempt of it, doesn't happen again. So, do I think that this makes it more likely? Personally, I don't think so. Especially if those that are responsible are prosecuted or punished appropriately, then it certainly wouldn't serve as, hey, maybe I should try this too. It'll actually be a good chance to put in a deterrent for potential future occurrences.
That's a good point. That's a good point. So if you punish it appropriately, then there'll be a deterrent against sort of future bad actions, or perhaps it sounds like he might have gotten a very bad piece of advice from his defense minister as the story is turning out.
Right.
But let's move back to some of the markets we're a little more familiar with and not so surprising. What are you thinking about today in terms of different sectors, different markets?
Well, I actually wanted to share an interesting, an insightful insights that I got from this really good podcast that I listened to over the past couple of days. It's from the podcast Invest Like the Best, which I highly recommend to folks. Very insightful. And this particular interview, probably about a month old, but I just came around to listen to it, and it focused on the semiconductor industry. And there were lots of great insights in it. But one thing that I wanted to point out that I thought was really interesting was the interviewer was comparing the AI investments of today to the telecom investments back in the late 90s. There are still voices, and I've even said on the show a few months back, I wasn't saying that AI investments were like the telecom investments of the .com, but if it were if it turns out to be something similar, like what the implications might, what it might mean for the sector and for the stock prices, etc. But a lot of people compare those two periods. And this particular interviewer, guest on the show, on the podcast, shared some facts that I thought were quite telling. Back in the late 90s, during .com, apparently, if you took the biggest names of that period, the amount of capex that they were doing, that they were spending, was something like on roughly 200% of the operating cash flow that these businesses were generating. In other words, for every dollar that they generated as in cash from the operations, they were spending $2 in capex, which means that you're not self-funding those investments. You need to rely on raising capital elsewhere, either through debt or equity, to fund those capex investments. That's clearly not sustainable if you needed to do that for a long period of time. So, and the number apparently on some years it was as high as the numbers were as high as 500% of operating cash flow. So you really can't sustain that kind of level of sort of negative free cash flow as an industry. And also just in terms of utilization, apparently something like only 2% of the infrastructure, whether that's fiber, networking gear, etc., was really being utilized towards the end of the 90s. So you're really building for the future. Like it was build it and build it and they will come type of a situation. Compare that to today, to AI infrastructure investments, which we know are in the hundreds of billions, which is a lot of money. But just the four major tech companies alone, Facebook, or Meta, Alphabet, Amazon, and Microsoft, they generate hundreds more of operating cash flow per year. So even though the investments are really big, big dollars going into these AI infrastructure, it's still being funded through operating cash flow. So it's a very sustainable situation from that standpoint. And second, in terms of utilization, it's hard to know exactly what the utilization of all these GPUs are, or GPUs is. But we know from listening to these companies that there's really no idle GPU capacity just sitting around. It's not like you have a whole data center full of GPUs that's just not being used and just sitting idle. I mean, in fact, if that were the case, you should just probably take them and sell them in the open market because right now demand is outstripping supply. So, it's really very different compared to the late 90s, both in terms of the sustainability of the investments, but also the utilization of investments. So I thought those were very helpful facts for somebody investing in the semiconductor space.
It's a very good point because it's sort of mind-boggling when you see the investments of tens and hundreds of billions of dollars.
Yeah.
Is that sustainable? But these companies, that the big tech is so big that it is more sustainable than it previously was.
Right.
And it's an interesting point about GPUs. Sometimes I guess you have a baseline usage of computing power, but at some point maybe you get spikes, and can you handle those spikes? And we're both from trading backgrounds.
Yeah.
Sometimes those spikes are completely unpredictable.
Right.
And if you don't have a little spare capacity or some potentially a lot of spare capacity,
right.
you're gonna lock up and slow down. And so that is an interesting point, probably worth looking at some more. Now, semiconductors. I guess one of now you're talking about semiconductors. I want to get your thoughts on Intel. Pat Gelsinger, resigned sort of suddenly, or was forced out suddenly. Earlier this week, the stock went up initially, and then it's been on a downward trajectory since, and now sort of the recent lows are in sight. What do you make of that? What are you thinking on Intel?
Sure. So I actually have a lot of respect for Pat Gelsinger. I don't know him personally, but as a leader in the industry, I think highly of him. In fact, when it was announced that he was going to run Intel to turn it around, he was the reason why we at my firm actually briefly considered investing in Intel. I mean, long story short, fortunately we decided against that at the end ultimately, but I think he's clearly very experienced, an experienced veteran, somebody who is very capable. So it's kind of sad to see him leave, but also it just shows you the magnitude or the difficulty of trying to turn around something like an Intel, or like Intel. Turnarounds are difficult to begin with, especially if you're a large company. Obviously, it's like turning around a trying to turn around a big oil tanker, right? It's far more difficult to do that than turning around a small speedboat. But turnarounds in semiconductors, I think, is especially harder because semiconductor business is one, very capital intensive, and two, it changes at a very rapid pace. So that's not a great combination if you're behind and if you're trying to fix yourself, because the world is changing. You have to spend a lot of money to catch up, but the world is also changing really quickly. So, for example, TSMC, the CHIPS Act earmarked something like $40 billion to help establish, to bring back semiconductor, building of a semiconductor manufacturing industry, and bring that back to the United States. $40 billion is a lot of money, but $40 billion is roughly what TSMC is expected to spend in CapEx next year alone, just in 1 year. So this is an industry where you have to spend a lot of money, and those investments that you made becomes not completely obsolete, but loses relevance very quickly because the product is changing so rapidly. It's also that's also the reason why the industry became so consolidated over the years. There are certain parts in the semiconductor supply chain that are really highly consolidated. Like TSMC, for example, really dominates the high-end, the most advanced chip manufacturing. For example, ASML is the only company in the world that supplies the machinery, the equipment required to make those high-end, complex semiconductors. So the reason why, in general, and even without those, even outside of those, generally the industry is very consolidated. The reason is again, the amount of money required is just so large. And so it's kind of hard for multiple players to try to win. So naturally, you kind of have one or two, big players coming to dominate the whole sector, and almost at every point in the supply chain. So if you fall behind, it's really hard to catch back up. And so on Intel specifically, right now I don't have a view on the Intel stock, but I just want to remind our viewers that turnarounds, one, are difficult to begin with. Turnarounds in semiconductors is I think even more difficult, which is also a lesson for others in the industry that you might be a leader today, but the position can change pretty quickly in this industry. Now, leaders could get dethroned in any industry. That's just the way things are. But it happens far more quickly. It could happen far more quickly to a semiconductor leader than to a leading packaged foods manufacturer or a consumer products manufacturer, for example.
It's really interesting. In some ways, if you're one of the top one or two names, and Intel was for a long time. I remember when I was buying PCs a few years ago, you wouldn't want a PC with an AMD chip. It was $150 cheaper than the Intel chip, and that really got turned around pretty substantially. So I guess it's great to be on top of a business, business like that. But once you fall off, trying to climb back up is pretty difficult.
Yeah,
and it's not, but the path forward to Intel, is it an acquisition of some sort? Do they bring in some other wonderkind who tries to turn it around, or do they go after like a specific niche of the industry?
The most likely path that's being discussed, which I which I mostly agree with, is a breakup of the company. So Pat Gelsinger was committed to not breaking up the company, but most people are now thinking that a breakup will be inevitable because, again, it's hard enough it's hard enough to survive and thrive being very, very focused. Like TSMC only does manufacturing. NVIDIA only designs. There are companies like Cadence and Synopsys that only do what's known as EDA tools. ASML only does EUVs, and they also do other types of machinery too, but they're all very focused. And it's not to say that you have to, that's the only path forward, but what I am saying is it's hard enough being really focused, but Intel trying to be both, a designer of chips and also a manufacturer through the foundry operation. We could probably agree that Intel tried really hard at trying to be both, and the best path forward probably is to break up the company.
And we just saw that with GE, which was once the wonder conglomerate built under Jack Welch, and now it's sort of three different companies. I noticed that I had some GE shares, and now I have like three different names. I'm trying to figure out which one was which.
Yeah.
But let's shift gears a little bit and talk about industries that are maybe not so concentrated. The barriers are so high. Industries like that, I mean, we were talking a little bit actually before the show about like motels.
Right.
Now, the thinking behind something like that must be very different than semis.
Right. No. Right. So you and I were talking about the motel industry, right? And so apparently, something like 75% of the motels in the United States are owned by Indian Americans with the last name Patel.
That's remarkable.
Right. So they're not. I mean, they're at some point in the ancestry, I'm sure they're share the same ancestors and are really a very large extended family. But a lot of them come from a particular region in India called Gujarat, and these folks basically migrated came to the United States decades ago and got into the motel business. And ultimately, at that time, clearly they didn't control 70%. As many immigrant families do, you come here, you try to look for a small business to run because getting a job isn't always that easy. So you look for a small business to run. And there were the motels. They go and buy a motel, and in that business, motels really it's really a commodity business. You don't go to motels for the experience. You go to motels when you're on a road show. It shows you the Wall Street background of me. You're on a road trip and you just need to stay somewhere for the night, and so you're going to go to wherever you get the best value, and you're not going to be that picky. So it's really a commodity product, and in the commodity industry, the lowest cost operator is really hard to, if not impossible, to compete against. So what these folks did was they'd go, they buy a motel, and they would actually live there. So instead of paying mortgage somewhere else and then just coming to the motel to work, they would actually live in the motels to save on housing costs. And often they would have large families, and the whole family. It would be a family business. The whole family would work there. And motels are also very labor-intensive business. So that's a competitive advantage if you've got your own labor, basically. And so that's how they competed. by being very, very cost conscious in a commodity industry. And so eventually it was impossible to compete with somebody who had lower operating costs than you. And that's how, and then they would mortgage their first property, buy a second property, repeat, do the third, and then expand. And so that's how they came to really dominate the motel industry. So it's really a stark contrast to the semiconductor industry, where the capital intensity and the complexity of the product makes it so that the barrier to entry in that industry is really, really high. You can't just show up and start competing. In many commodity industries, you can. Motels, again, it requires some capital, but nothing like the semiconductor industry, right? Restaurants, same thing. Consumer products, same thing. These are industries where, interestingly, the barriers to entry is actually really low. So it's easy to get started, but the barrier to scale is really high. So staying and growing is really difficult because it's really hard to compete against the largest player that's got the biggest cost advantage. And so there are other industries like that. Costco. I've spoken about Costco at least a couple times on the show, but Costco isn't the largest retailer in the country, but on average, Costco carries something like 3,000 SKUs, stock keeping units, 3,000 unique items in the store. Compare that to an average Walmart. On average, Walmart apparently has over 100,000 SKUs in a typical Walmart warehouse, a Walmart store. For the products that Costco buys, even though Costco's not the biggest retailer, for the 3,000 things that they buy, for many of them, they're actually the biggest buyer of some of those items. And so you have the biggest advantage in terms of volume purchase and therefore cost advantage. Add on top of that, Costco runs a membership model, right? So Costco's profits are really coming from the membership fees. So they don't have a whole lot of incentive to, keep margin or a lot of margin on their products. So they could even, set their prices even lower. And when it comes to, a container of mixed nuts or milk or eggs or other packaged consumer goods, those are really commodity products, and when you're the lowest cost operator, you can sell it for the lowest price, and consumers will go there to shop. So having that low cost advantage, that structural advantage, can be just as powerful as the competitive advantage in highly technical, advanced industries, capital-intensive industries that serve as an entry barrier.
It's a very good point. I mean, I know that I've known some people who are in the sort of wholesale business, and they sell to Costco, and they say, Costco does huge amounts of business with substantial returns.
Yeah.
But they're actually tough to, they negotiate very, very hard.
Yes.
And they get the best price out of you, but you deal with it because you can get such massive, massive volume.
Yeah.
So that's, I guess their moat is a totally different business than some eyes, but their moat is actually probably pretty big too. I mean, you have Sam's Club, but most people still go to Costco.
Right.
And when you were telling me this story about sort of the Indian families who own the motels, I was just thinking, I was in rural Michigan, visiting my son at college.
Yeah.
And it was exactly as you said.
Right.
And not only that they lived there, their kids, some of the kids were only 12 or 13 years old, but it's part of the family, and they were helping out with running the motel. So it's a great model. You know, it's you live at the motel, it's low cost, and it's a family business, and the kids eventually probably get educated and move away. And then I guess for the next generation, it'll be interesting to see what happens. But thank you so much for that. Really appreciate those insights. Great to have you on the show, and looking forward to having you here again.
Looking forward to it as well. Thank you.
Well, that will do it for Global Money Talk Live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sampro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thanks so much for joining us. We'll be back here tomorrow. Have a great day.